The most popular indicator among active stock traders is by far and away the MACD. 2.7 million views, 2.6 million views, 2 million, 1.5 million, 1.4 million. So in this video, we are going to build step by step the strategy you are seeing running on your chart now, as well as a scanner so that you can find the stocks matching the entrance setup. I'm going to be borrowing the ideas from the most popular MACD strategy video on YouTube from Mr. Data Trader because he's got some great secrets in there that really enhance this strategy. So I'm going to be taking his ideas, but of course, we're going to be adding to it by actually building out the script in Thinkorswim so that you can see these trades plotted onto your chart. So how all beginner traders use the MACD is they buy when the faster moving average crosses above the slower, and they sell when they cross back down. So our strategy for Mr. Data Trader is going to utilize that idea of buying the faster MA crossing above the slower MA. However, first secret, it's only going to buy if the current bar is closing also over the 100 exponential moving average. So let's do that first. Let's get the moving average plotted on our chart, but I want to do this within our custom strategy so that every time I turn this strategy on, I don't also have to go turn on a 100 moving average. It's going to save us time. It's going to make this a lot cleaner. So under the strategies tab from my edit studies and strategies modal, I'm going to hit create. This is going to load up our default line of code with an add order function, which we will use later. First, let's initialize a variable and declare it with the keyword plot so that it plots on the chart. I'm going to name my variable MA, and we are going to initialize it with the value of the moving average function. Now, this function has three separate input parameters. The first being average type. This is where we're going to let our function know that we want to see an exponential type moving average. Next is data. This is the values utilized to calculate the average for almost all moving averages. And what we'll use today, we use the closing price. And then, of course, we have length, which looks back over how many bars you want to use to calculate this average, which we're going to set to 100. So we want the exponential moving average over the last 100 bars, utilizing the closing price of those 100 bars. So back within our script here and inside the parentheses of our function, let's list out these parameters. The first, we want to see the average type be set to exponential. The value exponential is stored within the average type data type. So I have to type in average type dot exponential so that the machine knows it should search for this exponential value inside of the average type data storage because that's where it is, right? Next, we want the data to be based off of close, and we want the length set equal to 100. Each of these parameters, are separated by a comma. Within the parentheses, the line of code is ended with a semicolon. Now, of course, as I hit OK and we apply this script to our chart, we are seeing a 100 length exponential moving average plotted onto our price graph. But let's hop back into the script here by clicking on this little cog. It's bad coding practice to hard code values into your parameters. So what I'm going to do, I'm going to give myself a couple of lines here, and we are going to declare some variables that we store these values in. This is going to increase the readability and largely increase the customization of this strategy as we continue to build it out. So I'm going to declare a variable with the keyword input, and I'll show you what that keyword does here in just a second. This one, we're going to do MA type, and I'm going to set this equal to that average type dot exponential, and we're going to end that line of code with a semicolon. Next, let's go ahead and input data. I'm going to set this equal to close. Then let's input MA length and set this equal to 100. Now, instead of hard coding these values into the parameters of our moving average, we can instead call in these variables that we just declared and initialized with the same values. And since they all have the same values, right now, nothing's going to change. As I hit apply, you'll notice there's still a 100 exponential moving average on the chart. However, now, when I come into the settings cog of my strategy, I have input options. Now, I can easily change this to a simple moving average based off of the open over the last 50 bars instead. And as I hit apply, you will notice those changes being made. This is going to be very important for when we build out our strategy for further optimization. You can now get an idea of, hey, when we build out this strategy, how easily we can now test, well, instead of using the 100 exponential moving average, what if we use the 50 simple or the 500 simple or the 500 weighted based off of the volume or the high? Or you can see now how much this is going to build into our strategy optimization later down the road. And also, it's just a cool way to build a easily changeable moving average onto your chart. So back within our custom strategy script here, let's begin to build out our reasons for entrance. Remember, above the 100 simple moving average that we now have plotted on our chart and the MACD faster moving average crossing above the slower moving average. So I'm going to define a variable named by, and our first value that we're going to initialize is current bar close greater than this moving average, which we have defined. To pull price data in ThinkScript is very easy. You are provided with 4 data points on every single candle: open, close, high, and low. And to pull that information from the current candle, because this code will run on the close of every single candle, that is how code running in the stock market works, I simply need to type in close. Now, close greater than moving average. This is just your simple, you all know this, greater than operator. And of course, comparing against our MA variable, which we have initialized as this moving average of the exponential type based on the close over the last 100 bars. So now we will buy if the current bar is closing greater than that MA. And we of course have another condition that needs to be true so that that buy variable is returning true. Of course, we need this MACD cross. Calling this can be a little bit difficult because the MACD has multiple different values that it provides. So you can't simply call in the function and expect it to return the value you need. You have to know how to call these values because, of course, you are provided with 2 moving average values and a histogram value within the MACD study. So if I come into my studies, edit studies, and on my MACD that I have turned on, if I click into the cog here, these plots are the values that are provided to you by this study. So I can see now that the word used to call our faster moving average, as we know that is our cyan line, is value. The word used to call the slower moving average, as we can see that is this sort of pale yellow color, is AVG. So now, hopping back into our code here, we can amend, I forgot to save our initial buy value here of close greater than MA. Now we can amend our MACD moving average crosses onto our buy variable so that it only returns true when the close is greater than the 100 EMA and the MACD lines are crossing. Speaking of and, we are going to utilize the keyword operator and, once again, meaning that both conditions on either side of this keyword must be true in order for this variable to be true. So, and MACD, and this is a function, so we must open close parentheses to let the machine know it's a function. And now, much like we utilized dot notation to let the machine know it needs to look for this exponential value in the average type data storage, we will once again utilize dot notation to let the machine know to look for this value inside of the MACD study plot. We are going to use a new operator here called crosses above. And of course, we want to see when that line crosses above the MACD.AVG. As you remember, that is the name of the plot of the slower moving average. Now, crosses above is a very different operator than greater than. This statement will return true whenever the current bar close is greater than the 100 EMA. This statement will only return true if the previous bar, the MACD dot value, was less than the MACD dot average, and on this bar, the MACD dot value is greater than the MACD dot average. It will then stop returning true once this line just remains above this line. Does that make sense? It's only true on the bar that the cross happens. So now our buy condition is returning true when our close is greater than our moving average, and the MACD faster moving average crosses above the MACD slower moving average. Now is the perfect time to talk about the secrets of the sell on this strategy, because it is not as simple as, most beginner traders use the MACD. We buy the MACD cross up, we sell the MACD cross down. That is not what this strategy is doing. Rather, this strategy, when it buys, so you get your MACD cross on or around this candle, what this strategy looks to do is to place a stop loss at your recent local low, and then based off of the difference in your entry price to that stop loss, you want to multiply that by 1.5 for your profit target. So essentially, you're building out a 1.5 to 1 risk reward ratio based off of local low pivots. Now, when building out price action like this inside of ThinkScript, it's really simple. It's not complex, but it's going to look a little complex because we're going to have to do arithmetic of functions. But don't worry, don't get overwhelmed. I'm here to explain it to you. I'll explain it like I'm talking to a 5-year-old, and that's not meant to be an insult to your intelligence. It's just the easiest way to learn something you don't understand, right? So we want to plot two separate lines on our chart here. One being the stop loss, which of course will be the local pivot low. Next being profit target, which will be whatever the difference is from our entry price to that local pivot low times 1.5 and then added to the entry price rather than subtracted from the entry price. So we want these to be, of course, plotted on the charts for a visual. So we're going to declare our variable with the keyword plot. And for right now, I'm just going to name this one L. And this is going to be our stop loss. What we need to do in math to show this stop loss correctly is take the entry price value, then subtract from that our entry price value minus the lowest point out of the last 10 bars. That's how I'm defining local pivot lows using ThinkScript. The lowest low out of the last 10 bars. And you'll see what that looks like because we are plotting. So let's just go ahead and do it, and then it might be a little bit easier to talk about. First, I'm going to call in the entry price function, which is a really nice function that comes out of the box within Thinkorswim that will now return to you whatever the value is that our buy condition was true and our buy is showing on the chart. We are going to then subtract this, and I'm going to put this in parentheses because we want this to happen first, the entry price value again minus the lowest, I'm calling in another function here of lowest, which accepts two parameters. Data, we want to see the lowest low. The second parameter of length, we want to see the lowest low over the last 10 bars. If I now end this line of code with a parentheses, I'm still getting an error because I did not put enough parentheses on the end. Yes, because we wanted to wrap this equation in a parentheses, of course need 2 on the end. So entry price minus the lowest low of the last 10 bars. Does that make sense? Once again, it might look confusing, but entry price minus the lowest low of the last 10 bars. That defines our risk. That defines what we are risking when we enter this trade. And because we want it plotted on the chart for that visual, we just need to simply subtract that from the initial entry price value. Let's go ahead now and hit apply. Oh, and actually, wait a second. Nothing's going to show yet because we're not entering trades yet. Let me actually go ahead and buy into a trade here. Let's set our add order condition to this buy, which we'll talk about more depth in just a minute. But now simply when the buy condition is true, the buy will show up on the chart. Let's go ahead and hit OK here, and you'll see what I'm talking about. This will look a little wonky because we have no sells yet, but at the very beginning, when we get our initial MACD crossover, you can now see this line plotted on your chart showing you the entry price minus the lowest point out of the last 10 bars. So here, this is the lowest point, and then for the next 10 bars, it moves up because now this is the lowest point. Then it moves up because now this is the lowest point. See how it is tracking local lows. And as we build out the stop and sells, that'll make a little bit more sense visually. Firstly, I realize an issue with this, and this is actually the beauty of plotting out your buy conditions. You get that nice visual representation and you can see these errors. We, of course, want to sell if the current bar closes less than this pivot, right? Well, right now, we are comparing to the bar itself. The bar itself can never be lower than itself, right? So to fix that, we have to offset this value by 1. So on the end of our lowest low here, I'm going to open bracket, type in 1, close bracket. This is just your bar displacement, and we want to look at this lowest low value over the last 10 bars displaced 1 bar to the left, because now if I hit apply, we want it to be, see now how it's not utilizing the current bar as the low. It is instead not showing that lowest low until the bar after. In this way, we can actually get current bars closing below this value, which will be our stop that we're about to build right now. So let's go ahead and talk add order function since we referenced it, and since I want to start plotting some of these sells on the chart alongside the buys, as I think that will help the visual understanding of what we have going on here. So, of course, the name of the function add order, what this function is doing is, of course, actually plotting our conditions as buys or sells onto the chart. There is a large list of input parameters for this, the first being type. This is where we currently have buy auto. Now, I'm going to change my order type to buy to open, and then I'll have my sell, of course, be sell to close. Because if you don't do that, if you just use buy auto and sell auto, it will also open short positions. Like if you're not in a long and the sell condition becomes true, it will open a short and use that buy auto then as a cover, of course. I don't want to do that. I don't want to build shorts into this strategy, at least not right now. So we're going to use buy to open and sell to close instead so that we kind of avoid that. Whoops, let me hit back instead of that. Next is condition. And now this is where we placed in our defined variable with the name of buy. So when that condition is true, the trade will buy to open, right? Next, we have price. This is the value at which the stock is bought at. For some reason, it's defaulted to buy the open of the next candle. That's what this -1 means, of course, offsetting the other direction rather than to the left, offsetting to the right. I'm going to change this to buy the close of the candle instead. I almost always do that. I'm not sure why it's defaulted to buy the open of the next candle, but whatever. Then we have trade size, which we'll talk about. Then just some look and feel stuff. What color do you want the tick to be? What color do you want the arrow to be? And what would you like the name of the order to show on the chart? So back within our script, remember we wanted to change our order type to buy to open rather than buy auto. We have our condition already set to our buy variable. Next is the price at which it buys at, which I want to be the close of the candle in which the buy condition is true. Then we have trade size. Now, trade size is a fun one. Let's actually just go ahead and turn this on and scroll all the way back to the beginning and take a look at our buy. You'll see here it says new strategy 32 being the current name of our strategy. I forgot to ever name it, but then you'll see this 100. That is simulating an entrance of 100 shares. And it's doing that because if I come back into studies, edit studies, click into this global strategy settings, that is the default trade size for entry orders. You could, of course, change that here if you would like that to change. You can now see it is simulating an entrance of 75 shares, but we want to make it a little bit more variable than that. We want it to change based off of our decided position size. So I'm going to add another input. Let me just not have the space here. I'm going to add another input at the top of my code, and I'm going to name this one position size. And let's just go ahead and let's say this person is trading $25,000 positions. So I will initialize this variable with the value of 25,000. Now, for our position size parameter in our add order function, we can go with position size, calling in that variable, divided by close. So it will now buy as many shares as it can based off of the closing price, as many times as that evenly divides into 25,000. So if I hit apply, you'll now see on SPY, on this first trade it takes, it's entering 564 shares, and the closing price of this is $44.25. I am not that good at math, but I know the computer is, so I'm going to assume that that is correct. Now we've got our stop condition defined and plotted on our chart. So let's go ahead and create that stop condition. We know now simply what it is. If the low of the current bar is less than our L variable, being our entry price minus lowest low of the last 10, etc., that we just had a long conversation about, that is when we want the stop condition to return true. Now, if we go add order type sell to close, meaning we're selling only when it's time to close positions, set our condition equal to stop, and we'll sell the close of the candle. By default, it sells the whole position, so I don't have to type that in. If I go ahead and hit apply on this, you will now see the buys and the sells being plotted on the chart. Of course, we have more work to do here because this is only our stop loss. We still haven't built our profit take yet, but you now see when you get the MACD cross and we're above the 100 EMA, you're getting your entrance and you're getting your sells at the close of candles in which the low breaks below this local pivot. See how this is the lowest point out of the last 10 bars? When this low breaks below that, we sell the close of the candle. And then let's hop back into our add order functions and just clean them up a little bit. Remember, the rest of the parameters were all look and feel stuff. Tick color, arrow color, and name. So tick color, we want to be green for the buy. We want the arrow color to be green, and I want the name to read buy. You have to use color dot, as these color variables are stored inside of the color data type. And then when you want a string of letters to appear, you have to put them inside of quotation marks. And down to our sell, I'll just do position size divided by close here, even though it doesn't really matter, just so the parameters continue to be in the order they're supposed to be. We're going to do color.red, and stop. So now as I hit apply, you'll just see it just looks a little bit cleaner, right? Buy, green, stop, red, yay yippee. Now we have to build out our profit target as well. Remember, the profit target is whatever that difference is in your entry price minus the lowest low out of the last 10 bars. We want that multiplied by 1.5 and then added on top of the entry price. So since we've kind of already done this calculation for the stop loss, this is relatively easy. Let's plot another variable. I'll name this one H for high. This time we're going to go entry price, and then we want to do plus this entry price minus lowest low. Actually, you know what? We don't even have to do that. Wait, what am I doing? We can do entry price minus L here, right? Because L is already predefined as that value of entry price minus entry price from the lowest low pivot, right? So we can now call that variable into this calculation. And of course, I want this multiplied by 1.5. So entry price plus the entry price minus the value given to you by this variable times 1.5. If I did that correctly, as I hit apply, you should now notice you get this white plotted line on your chart, which should be a 1.5 times difference greater than this difference. So if we go from here to here, that is minus 1.73% or 78 cents roughly. If I go from here to here, that is plus 2.56% or up 1.16 points. So that sounds to me like 1.5. Once again, I'm not great at mental math, but I know the computer is perfect at it, so I'm going to trust that is correct. Now, of course, we have to add in that order as well. So let's define a new variable here called profit, and let's take our profit. I hate autofill. Let's take our profit when the high is greater than H. Then I'm going to come down. I'm actually going to just copy this add order, and we're going to change this to be our profit condition. Instead, I'll change the name to profit. And you know what? Just so it's a little easier to see, let's change the color to cyan as well, just so it stands out when we're looking at our testing here that it is taking profit correctly when expected. You can see in this trade, it is, of course, when this high crosses above our plot here. This is actually really nice. I mean, and kind of look at, let me move my big albino head out of the way. Kind of look at what happens here with this strategy now. When the stock is more volatile, look at how wide your stop and profit is. As the stock here goes through this sort of chop, look at how now your stop and your profit target both tighten up. That's really nice. When more volatile, the trade has more room to breathe. When it tightens up, it doesn't need as much room to breathe. It's not as volatile, so your profit and your stop losses tighten up as well. But now if we zoom out, we should see examples of correct profit takes and correct stop losses along the way. Now, why do we do any of this? To automate the collecting of our data for our testing and optimization of strategies. I mean, there are a ton of trades happening, and this is just the SPY daily chart. I mean, if you wanted to look against multiple different tickers, which you should in your testing, you'd pull from like NVIDIA, you'd pull from Block, you'd pull from AMD, you pulled from Apple. Maybe you would look into different time frames as well. You look in the 5-minute, the 1 hour, and the daily. You pull all this information, look at all of the trades that are being simulated by this strategy, and think about how damn long that would take if you had to gather all this data manually, right? So now that you have all of this data, what you can do is you can turn on the floating P&L. And here we are looking at the Apple daily chart, and you can see we are up $53,000 currently on the Apple daily chart. Nice. If I go back to SPY, we're up 14,000. If I look at something like Tesla, we're up 7,500. If I look at something like NVIDIA, we're up 78,000. Great. Now, what did we do earlier inside of our code? Remember, if I come back into the settings of our code, remember how we made all of the MA parameters inputs. Well, let's take a look at what if we only buy if it's over the 200 exponential moving average instead? Then take a look at the profit difference. Well, what if we look at the 150 simple moving average instead? Then you run that and you look at the difference. Are you starting to now see the power of code? How quickly you can change your input and input parameters for your entrances and your exits to gather all new data with just a few keystrokes and to optimize the performance of your strategy rather than having to take hours and hours and hours to gather all of this data manually every time you wanted to change something and look to optimize. And speaking of optimizing, let me show you something else that can be done with the add order function. So let's say on our stop, since we are selling when the low is less than L, which of course is our stop loss plot, we know that on that day that this plot is touched, right? So instead of stopping out at the close of that bar, let's make the price we stop out at whatever the plot is at. So essentially now we'll get stopped out when the price touches that stop loss plot rather than waiting until the close of the candle. That should help protect some downside risk. And as you'll notice here on NVIDIA, we just went from like $87,000 up to now $92,000 up. You can do the same thing on your profit take. Hey, we know we're touching the H. Maybe we try to sell at that H plot rather than wait till close. That, and I was going to get to this, my assumption is that would be worse Because on profit, you want to let it run, right? On stops, you'd like to cut faster, but on profit, it looks like you might want to wait until the close of the bar to take. Let that kind of explosiveness continue before you sell. And once again, look at how using code just taught you that. In just a couple of keystrokes, you just learned that, not only in the context of this strategy, but in the context of large stock market ideas in general. Hey, if we are looking for strength, we wait to sell to the close of the candle. If we're stopping out, we sell directly at the stop out value. You just learned, and this is, you'd have to do a little bit more testing than just looking at NVIDIA. You know, you'd want to go look at multiple time frames and multiple tickers, but you see how now you're learning ideas about the stock market and trading in general because of utilizing ThinkScript code like this. And if you're interested in seeing more ThinkScript codes, I have published over 65 of my own that I utilize every single day over on my website, daytradingstrategies.net. Link in the description down below. Now, I know the strategy is now complete. That's kind of the sexy part of the video, but don't go anywhere because it doesn't matter how damn good your strategy is if you can't find stocks that are aligning with the setup. Now, since we've already created our code for our setup, like when we want to buy, this part's going to be really easy. I'm going to copy down our buy condition, then just cancel out of this, hop on over to the scan tab, then let's pretend that wasn't there. I'm going to add a study filter and clicking on the pencil of it, hopping into our ThinkScript editor, replacing this with this. Now, of course, we are calling in a variable that currently doesn't exist. So once we've kind of done the testing, right? Once we've done the testing on the last stage, say we know, hey, now that the 100 length moving average exponential is the best, we can just go ahead and enter that here. So I'm going to use moving average, the first parameter being average type.exponential on the closing price over the last 100 bars. Now, if the close greater than that moving average, which we have tested and found to be the one that works the best for the way we want to trade, and if the faster MACD value crosses above the slower MACD average, those stocks will be returned on our scan here. So as I run the scanner, we should see a list of stocks that are currently matching our buy condition today. We've got Carnival and we've got Pfizer as our first two stocks. If I load up CCL, yes, indeed, we're of course above, sorry, let me move my head. We are above the 100 simple length or 100 exponential length, moving average. And as you can see here, if I make this a little bit easier to see, the MACD is getting that cross. Next, we had Pfizer. If I go load this up, yes, we are above the 100 EMA and the MACD is crossing. So the scan looks to be working as intended. Ladies and gentlemen, we just built a full trading system around the most popular indicator, the MACD. I hope you enjoyed it. If you did, make sure you like, make sure you're subscribed if you're new around here and enjoy this kind of content. I post it almost daily. And check out my website in the link in the description down below if you'd like access to all of my custom Thinkorswim codes. I'll catch you all in the next one.